The world economy is facing a new challenge, the coronavirus outbreak.
Global health authorities showed that coronavirus has infected more than 43,000 people globally. Out of them, 42,638 are confirmed cases in mainland China, with the toll surpassing 1,000 deaths. While the global economy has been significantly impacted, let's have a look at how it's going to affect Indian markets. Indian Ratings and Research (INDRA) does not expect the novel coronavirus outbreak to materially affect Indian corporate supply chains in the near term, provided it remains contained in the Hubei province. In case the virus is transmitted over the next 3 to 4 months, the extent of supply chain disruptions globally could be higher than that during the 2003 SARS outbreak. The quantum of impact on sectors would be contingent on the nature of business activity and the nature of linkages with the rest of the world has with mainland China. Several Indian industries have a significant direct dependence on supplies from China. Some of these products, such as antibiotics, activated pharmaceutical ingredients, and fertilizers, are critical commodities, and any disruption in the supply over the long term could have far-reaching economic consequences for India. Textiles and automobiles could also face supply disruptions for critical raw materials. All this together could further worsen the recovery in industrial production over near to medium term. China is a net importer of various commodities globally. Commodities where the country contributes to a large part of global consumptions are likely to experience pricing pressures over near to medium term. Indian corporates which are net users of these commodities are likely to report an improvement in their debt protection metrics, whereas some of the net producers are likely to be affected. China accounted for nearly 11% of the global imports and 13% of global exports in 2018. It also serves as an import supplier of various raw materials and intermediate goods. Thus, the supply chains for various globe and Indian industries are linked to China. Now, in a situation wherein the outbreak continues for over 2 quarters, the impact on China's industrial activity could be substantial, both due to a fall in labor availability and consumption demand. Fitch Ratings expects the Chinese GDP to grow by 5.5% in 2020 as against 5.9% in its pre-outbreak scenario. However, in a worst-case scenario, it expects GDP to drop to 5.2%. China serves not only as one of the largest importers for many commodities, but also as a transit hub for various supply chains in South and East Asia. The experts believe if the outbreak continues to spread unabated, these supply chains could temporarily be decapitated, although major trading hubs and ports outside Hubei province are yet to be locked down. We expect a severe impact on global trade volumes, which are already under pressure amid mounting uncertainties emanating from geopolitical tensions, trade protectionism, and Brexit. Many experts believe that the impact of 2003 SARS outbreak on global growth, at least in part, was mitigated by the fiscal and monetary policy room available to policymakers globally. World dollar liquidity was abundant, while government, corporate, and household leverage levels were significantly lower, including in China and India, than the current levels globally. China's account surplus, for instance, has already been under pressure, and the country has crowded out capital flows to other emerging markets. Thus, the ability of governments globally to stimulate growth remains limited. Now, let's take a scenario where it takes longer than anticipated to contain the coronavirus outbreak. The downside risk to global growth could be substantial. Indian exports could be affected at 2 levels. First, by way of a slowdown in Indian exports to China, and second, as global demand recovery remains lackluster. For instance, India accounts for nearly 16% of China's cotton imports and 13% of its construction material imports. China's share in Indian exports for certain commodities is, however, even larger. So guys, we need to prepare a portfolio which is diversified into different asset classes, sectors, or industries, and even countries. But once again, there's nothing more important than our health. Well, there's nothing without health. We all feel for the citizens of China and those affected around the world. Let's hope the suffering is contained as much as possible. My name is Yogesh, and you have a great weekend. Thank you so much for watching this video. To keep yourself updated about the latest happenings in the world of financial markets, subscribe to this channel. To know more about our seminars in the month of February and March, click on www.century.ae.